Welcome to Finance Revealed. Watch the complete video to discover new market secrets. Subscribe now.
Raoul Pal on things you should never do with your crypto. Raoul Pal is one of the crypto world's most vocal bulls, a genius entrepreneur, and also a master investor who has seen the evolution of the world's financial systems, riding the heights and experiencing the lows as well. Recently, Raoul Pal has made a gigantic prediction that shook the crypto space, stating that Bitcoin will be worth between $250,000 and $400,000 by March 2022, with Ether surging to unprecedented heights of $20,000. In a recent conversation with Pompliano, Raoul Pal breaks down his thoughts about the crypto revolution happening and why it is worth all the hype. Raoul Pal also shares his insight about things you should never do with your crypto. No matter if you're holding Bitcoin, Ethereum, or any other crypto, you need to listen to this exclusive advice from Raoul Pal in order to protect your cryptocurrencies. Stay tuned to the end of this video, because I will also share Raoul Pal's exclusive opinion regarding NFTs and why he thinks Bitcoin people don't like Ethereum. But before we come to the most critical part of this video, it is important to know that Raoul Pal is a seasoned crypto expert who has 100% of his investment portfolio in cryptocurrencies. Therefore, it is extremely important that you should pay attention to his advice regarding the use of leverage to trade crypto. I'll explain this in detail later on in the video. Previously, Raoul has said that the vast majority of his crypto holdings used to be in Bitcoin, but he revealed that his makeup of his portfolio now looks radically different compared with a year ago. Now, 55% of his savings are in Ether, while just 25% is Bitcoin. The remaining 20% is split across DeFi tokens, so-called Ethereum killers, including Polkadot, and a selection of special tokens. Explaining his enthusiasm for Ether, Pal explained, "There's tons that have gone into just holding, tons that are locked up in DeFi, tons that are locked up in NFTs, and you're left with, as of today, 11% of the entire supply of Ether available, and it's going down every day. And the demand is going exponential. The only outcome is an exponential rise in price. There is no other outcome." Now let's address the elephant in the room. Raoul Pal mentioned an important point in his interview that most people are unaware of, and this can lead to some serious damages to their crypto portfolio. According to Raoul, humans have this one thing in their nature, and that is we love leverage, and that is one of the fundamental flaws. Raoul believes that we should not use leverage to trade crypto. If you don't know what leverage is, it essentially means borrowing money from an exchange or other service to buy crypto and increase the riskiness of your trades. Let's say that you borrowed money to buy original Bitcoin purchases, and you put down half of that money. So at $26,000 or $27,000, you have lost all your money. So although your potential returns are higher, but you also suffer a real risk of being liquidated, which is when your investments fall enough in value that the lender who you owe money to closes your positions because they are afraid you will not be able to pay them back. I know several people who have had this happen to them within a few minutes, and they lost everything. Without leverage, at least you have the chance to hold until things go back up. While trading with leverage isn't anything new, it can have significant consequences in the cryptocurrency space due to its volatility. This is thanks to borrowed funds from the platform in which you are trading. For example, if you are on an exchange that offers 50-to-1 leverage, you can trade up to 50 times your initial investment. That translates to 50 times any profits you make. When you invest $1,000 into Bitcoin, 50-to-1 leverage would turn that number into $50,000. If you sell in profit, you'd return the borrowed $49,000 to the exchange, but keep your multiplied profits and your initial $1,000 investment. This is also referred to as cryptocurrency margin trading. The margin is your out-of-pocket investment. The leverage is what you're provided by the platform. However, this comes with a risk. While the initial investment requires less out of your pocket, it is entirely liquidated if the price drops against your bet. With great risk comes great reward, and also great failure. That is why you should never use leverage to trade crypto. It is a dangerous tactic and can lead you to lose your entire investment within a blink of an eye. You should not overcomplicate things by thinking about derivatives or future options. and don't think about leverage at all. Talking about the volatility aspect of cryptocurrencies, Raoul Pal has always maintained a clear-cut narrative regarding this issue. He explained that Bitcoin's volatility should never scare investors. He instead argued that it should be looked at positively. In exact words regarding volatility, Raoul said, "It's a feature that drives the risk-reward. So without any volatility, you can't have compounded annual returns of 230%. Volatility is your friend in this occasion. Also, the volatility is highly skewed to the upside. Doesn't mean you don't get sharp downside shocks, and you can't see big moves," Pal said, adding that Bitcoin has seen a massive appreciation since its inception, and that's what investors want in risk-seeking assets. Also, institutions such as JP Morgan have said in the past that a decline in Bitcoin's volatility has made it more attractive to institutions, and that could boost its adoption. But according to Pal, institutional investors, sovereign wealth funds, and pension funds are more taken by Bitcoin's ability to generate top returns within a portfolio, rather than being put off by its volatility. Everybody is getting involved, or is in the due diligence process of doing it, he said. "I think you can't avoid the fact that it is the best performing asset class in all recorded history already, and it's the best performing asset over any period of time." The former hedge fund manager said most people in the crypto world don't like regulation, but he is in favor of it as long as it is a light touch oversight that allows people to build on innovation. He doesn't expect crypto regulations to hurt prices, but to instead attract more capital in the space and provide confidence to people in the industry. Another important point to be discussed is the role of NFTs and why Raoul Pal believes that NFT will disrupt the global financial system and business models. Raoul said that the non-fungible tokens, NFTs, will restructure financial and global business operations. He claimed that the breakthrough of tokenizing real-world assets will completely reshape the way we conduct business. Raoul said that, "Basically, I have for a long time been talking about how we can tokenize everything conceptually. NFTs were the breakthrough. This was the token that you can tokenize anything on. What does this all mean? It basically means the breakthrough has been made to attach intellectual property, or physical assets, or digital assets, to a blockchain in a method that is transferable instantaneously to anybody and storable and proven in its store. So using that, you can limit scarcity and also imply smart contracts." The macro analyst highlights that the growing crypto sector is showing huge potential to change the financial markets. "This is going to really break everything. I think the securities market will be attached to tokens, NFTs. I think we'll find all financial instruments will go that way. Because why? We can settle instantaneously, we can trade 24 hours a day, and it doesn't cost anything to do it." While everyone thinks decentralized finance, DeFi, is a big breakthrough, Pal is less excited by DeFi and believes the NFT space is where the true innovation lies. "When I look at NFTs, that's when I get really excited. And again, I'm not talking about collectibles. I'm not really interested in that market. Other people are. And it's very interesting, but it's not for me. What I'm interested in is a disruption of global business models, supply chains, and all of the things that can come with NFTs, and a change in the entire financial system that could be attached to this technology." And lastly, addressing the issue of Bitcoin versus Ethereum comparison, Raoul Pal shared his thoughts, saying that the only reason Bitcoin doesn't like Ethereum is because of the fear of change. They are not ready to accept Ethereum because it's human instinct that we fear what we do not know. Both of these cryptos have totally different use cases and hence no need for comparison. And that brings us to the end of today's video. What are your thoughts about Raoul Pal's advice regarding things you should never do with your crypto? Tell us in the comments. And don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.
Raoul Pal, Schiff, Rickards, Gerald Celente, Kevin O'Leary, Warren Buffett, Tyler Winklevoss, Bitcoin Gold, Bitcoin Zero, Bitcoin, Bitcoin Options, Bitcoin Live, Bitcoin Up.